This video is sponsored by Tradecraft. Create your tags, tag your trades, store your recordings, create screenshots, and look at your statistics. You have the ability to create statistics using several widgets. You're able to place them wherever you please, having a place where you can store all your playbook trades, and you can quickly flip through them, studying all your trades. Tradecraft is more than a journal. It is a tagging software that allows you to create the statistics you need, where you have the ability to filter your trades out on an extremely deep level, allowing you to figure out exactly where your edge might be. For more information, check out the link in the description of this video or visit tradecraft.club. I'm excited for this. It's an interview. This is with somebody who's been trading longer than I've been alive, I imagine. And it's an ex-pit trader. He's still doing this. And one of my trading buddies that I've known longer than anybody else, this is his mentor. So this is going to be a long one, so buckle up. This is going to be Jud Hirschberg, and this is his screen, by the way. It's going to look like this, white wave trading, 50 years of pragmatic trading. Man, you've been doing it forever. What's up, Jud? How long have you been trading for? 50 years?
Started in 1974, trading currencies on blackboards.
Gee, how do you make a trade on a blackboard?
That's how the trading was. They had pit guys, and people would erase the bid and offers. It's been an interesting journey. I was just out of school. I went home. I was trying to figure out what I was going to do with my life. And I was interviewing with a paper company. And they sent me to, I grew up in Wisconsin. They sent me to Milwaukee for all this psychological testing. And the president of the company who I knew, he just said, "Jud, this isn't for you. It's just not for you. It's not your mental makeup, and you're not going to do well going in the kitchen selling people, paper products."
Yeah.
And he was paying a salesman $250,000 a year.
Wait, back in the 70s?
Oh, yeah.
Jesus Christ.
So it wasn't like it was small change. He said, you're not going to be happy. So,
and that's because you took a psychological evaluation, and
yeah.
Oh, all right.
Put me through this whole battery testing.
So then what?
So I came down to Chicago. My dad sent me to the Roosevelt Road to the south side to buy a suit so I could interview. And another friend of the family, through one of my cousins, his father-in-law said, "Well, come on down to the Merc." It was at 222 South Riverside, and in those days, the observation gallery was right above the cattle pit, so you were virtually 10 feet away from the traders.
So what were the big products that were being traded back then?
It
coffee,
was all the meats.
Cattle. What's that?
Hogs, belly, cattle, feeder cattle.
Did S&P or NASDAQ exist back?
Well,
not
S&P
NASDAQ.
S&P didn't even come until 1982. This is 1974.
Oh, wow.
So, I looked down and I looked at the people in the pit. I said to myself, if these guys can make a living at this, I can.
What? Now, when you walked in there, was it like chaos with the yelling and screaming and shit like that?
Absolutely. And it was exciting. So I walked up back into Barry Lynn's office, and the man I was talking to was Herbie Young, and he was the guy who invented discount futures.
What's a discount? What's a discount future?
Yeah, well, at those days they charged you $80 to buy and sell a commodity per contract.
That was the commission?
Oh yeah, and then he brought it down to $15 and $12 and then like $2. So Barry Lynn, Lynn Waldock, they became huge. So I went up into the office, and Herbie looked at me and he said, "So what do you think?" And I said, "It was great." He said, "Will you start tomorrow?" I said, what do you mean I start tomorrow? I said, I don't have any clothes with me. And he goes, well, okay, go home and you start the day after tomorrow. So, okay. So I went back into Wisconsin, got some clothes, came down and moved in with a cousin for a little bit. I started working as a clerk at Barry Lynn's desk. And then he made me his personal slave for, I don't know, about 6-7 months. And in those days, you could only own one seat. You couldn't own two.
So what were you doing for this guy?
Following me around to backgammon games and giving him the high-low last every 15 minutes and whatever he wanted to follow. And then putting in his orders. So a couple of guys that were currency traders, currency arbitragers, Marty decided he wanted somebody to fill his orders because these guys were all fundamental traders. And they didn't want to be in the pit or on the floor. They wanted somebody they could trust to do their orders, and they didn't want to give them an order filler. So I got to.
It seems like people used other people to trade back then a lot. Was there a lot, and also was there a lot of delay between trades back then?
Oh no, to get your order back there was.
Okay.
But not to trade. It was instant. You know, if you were in the pit and you were on the floor, in those days it was really kind of a closed club. And if you were down there, you know, you had to be pretty out of touch not to make it, or so much of a jerk that nobody wanted to deal with you. So, you know, the way I started was, you know, I didn't know anything. So, you know, Marty and Steve and Raz and all the other guys would just go, well, Jud, buy yourself 2 contracts and then buy us 500. And when, you know, you're done filling the 500, you take the last 2 and that's how, you know, I made money.
Were you nervous trading for these guys?
No.
Because they tell you what to do, so you just
they told me what to do, and I treated their money as my money. So if I didn't like something, it was totally all discretionary.
How do you make decisions back then? I mean, because in my generation, you know, we look at charts or whatever. How are you making trading decisions?
Well, you know, we had charts, but it was from a fundamental basis. Now, there's a really good YouTube on my White Wave Trading Strategies YouTube channel that was recorded for the CME Trading Challenge, and Ira Harris and I did a couple of those as to how to make a trade, how to decide you want to make a trade.
Was this recorded back in the day?
No, we just recorded one a few months ago.
Oh, and you're recording how to make a trade back in the pit days? Is that what it was?
No, Ira was always fundamental.
Okay.
The guys who started me were all fundamental traders. These guys made vast amounts of money, much more money than the guys scalping. So there were really 3 groups of people. Okay.
Yeah. You
had people that were fundamental traders and weren't really price sensitive. You had, you know, locals or scalpers that were just, you know, trading the edge off the order flow. And these guys never made the transition to electronic trading, you know, the majority of them.
Yeah.
And then you had the big order fillers who, you know, were making so much money filling orders that they started trading other products on a macro basis. In other words, some of these guys got so fabulously rich, you know, that were hog traders or whatever, and just started, you know, bought gold in 1979 and made an unbelievable fortune. Which, you know, the biggest, you when the currencies are still on blackboards, and then they went to small pits where it was open outcry.
Oh, so there was a difference between open outcry. That's what I'm familiar with, seeing the open outcry in old documentaries and stuff. But you're saying there was something else with this blackboard. Can you describe
That's
what
how they
that
were
looked
posted.
like?
Bid and offer. They were 80. The currencies were 80 ticks wide.
So there was no open outcry. How were the orders submitted?
You went to the there was a guy from the exchange who was the only one allowed to touch the blackboards. And you told him what your order was, and if you said you wanted to buy that, then he would take that order off and you would card that trade. Same if you wanted to sell it. If you wanted to put in a bid or an offer, he would put it up on the blackboard for you.
What does carding a trade mean?
We used to have trading cards, buy and sell side.
Okay.
So you'd write down the quantity, the broker, the clearinghouse, and the price.
Now you just click a fucking button.
Yeah, now it's a button, right? So, that's been a whole process over the years. I mean, how I got accepted into the pit was, everybody would go to lunch and they leave me with all the orders on the floor. And
by yourself?
Well, no, I mean, there were other traders around,
okay,
but the big traders, they trade an hour, they were gone. For a number of reasons. One, because they trade the early flow from London. And then once London went to lunch, I mean, there was nothing going on because all the currency volume was in London. Okay. Wasn't in the United States. So if they were all getting drunk in a pub, what were you standing around for?
So you had better they had basically better volume. Is that what it was? Better flow in the morning?
Yeah, you have flow 2 times a day.
Yeah.
So it's when everybody was getting drunk or not getting drunk, or when they got drunk and came back to work and traded some more.
So when you got left, that's crazy. Getting fucked up and trading. So you got left by yourself. What were you doing when that happened?
Well, they gave me orders to watch. So then,
okay.
The gold pit had just started. We had small pits for the currencies, and there were like 10, 15 guys that kind of huddle up every morning, and we go from one currency to the next, and they'd open them up on rotation because there was only a few of us in the international monetary market, and we go from one station to the next because there wasn't enough. There just wasn't a lot of us. It was a brand new division of the CME. So, it was one day everybody was at lunch, and, Marty told me to go into the gold pit and bid and offer and just be obnoxious until somebody traded with you. Well, I said, okay, I guess I can be obnoxious. So, I went in and I'm bidding and offering on one lots. And
so you're bidding and offering. So what you're doing is you're just throwing out a bid, throwing out an offer, and canceling them, basically.
Right. I mean, you see them on the screen, but you were doing it live.
Okay, so you were kind of like you're just dicking around with people through the fucking order flow, essentially.
Well, you were making, the locals were the market. They were the liquidity.
Yeah. Wait, were you
couldn't
a local?
do anything without the locals.
Were you a local when you were doing this?
There weren't any banks yet.
Okay.
So I raised my hands up, and the biggest order filler in the gold, Michael had. It took 2 hands to hold on to his order deck, and the decks were basically buys and sells at prices expanding, to the closest price on the outside inward. Okay.
Okay.
And I raised up my hand and I knocked his deck out of his hand, and it dropped in the middle of the fucking pit in three pieces.
Wait, did you do that on purpose?
No.
Okay, it was an accident.
But he just looked at me like, you fucking asshole. And I looked right at him, and I knew that was either I said the right thing, or I was gone forever.
Yeah.
And I just looked at him. I said, I'll eat whatever it is. And mind you, I had $1,500 to my name.
That's like if you're electronic trading on a computer and somebody comes and fucking bumps your elbow with the mouse, and then you submit a fuck up order. That's basically what you did, huh?
Well, I didn't even do an order. I just knocked his whole order deck out of his hand.
Okay.
And he just looked at me, and then because I said what I said, he peeled off like $1,200 right off the top of the deck. I didn't even talk. He said, I sold you this, I bought this, I sold you this, I bought this.
Oh, shit.
And then I was accepted.
Accepted? What do you mean accepted?
Well, I was accepted as part of the club because I stood up and I said, okay, whatever it is, I'll be a man about it and I'll eat it.
So
I caused the problem, I'll take care of it.
So they saw that as like a good deed almost. And
yeah.
like,
they said, okay.
How'd you feel? How'd you feel that you were in the club now?
Well, at least I was accepted by them. And the guys, if he didn't trade with you, you were going to have a hard time making a living.
Oh, so certain guys wouldn't trade with other guys because they didn't like that guy, is what you're saying.
Well, if they don't like you, they're not going to trade with you. And if you wanted, the big order fillers had a lot of power. If they didn't trade with you, you couldn't get in and around.
And so when you say order fillers, these are like takers almost, market orders, correct?
No, they're the guys that actually fill the orders. So if somebody called in from a desk from somewhere in the country or around the world and said they wanted to buy or sell a certain currency at a certain price or gold at a certain price, the order would go to those guys.
Okay.
They would have all the orders.
Was there...
The locals wouldn't have any orders. All you were doing was trying to make a market.
Okay.
And get an edge off the order flow and make money. So, the really good guys that made a lot of money were standing next to a big order filler. Because the order fillers, let's say you had 1,000 contracts.
Okay.
You don't want to trade with 1,000 people. You want to look at one or two guys and get the whole thing off and not have an out trade. You didn't want an error.
Was there a queue like you have now with futures back then?
The queue was who is your guy?
So you guys just were picking and choosing whoever. If they needed...
Yeah, if they didn't like you, you didn't get a trade.
Damn.
And if you weren't trading big enough, you didn't get a trade because the guys wanted to pack their packages off and the order fillers wanted to make money by filling orders with no errors. So, if you undercounted or you overcounted, you wanted a guy that if you had a problem would take the trade from you and you could keep on going.
Okay. Did you see a lot of fights in the pit?
Yeah, I was in them.
What did you do? Who started it? Who started it? Did you start? Were you a shit starter? Did you start a fight with people?
No, you're basically in a scrum for your spot, right? So it's a scrum for money.
So you're trying to stand in a specific area, correct?
Oh, yeah.
Okay.
See, I mean, the biggest problems, came when Leo decided that all the banks should come down and make markets in the currencies. And then they looked at the locals who built the place as, their liquidity to make money. And I get in fights with these guys all the time. It's like, stick it up your ass. I built a place. this is my game and go to hell.
So the fight sounded like they started with some shit talking first.
Oh, yeah.
Then what?
And sometimes there'd be some pretty good fights.
So you guys just start shoving each other and throwing
Oh, I
fists?
mean, I remember one day in the yen, I was like the largest trader at the time, and I got a lot of I got 12, 1,500 contracts at a price. And I mean, I knocked everybody down. It's like, get out of the way.
Well, you're just standing in
Because
one
I was
spot.
waiting for the dealers to come in and give me, and give me a price so I could get out.
So when you say you knocked everybody down, you mean you knocked everybody down with your orders?
No, with my body, and I'm small.
Okay. But you're standing in one spot. What are you running around in there or something?
No, you just start, it was tight. You start pushing and shoving.
Oh, I see. Okay.
You had to fight for your space a lot. And the bigger pits, when you got to the big S&P pits or the Eurodollars or the T-bills were like that. Guys were trading 4 different prices in the pit.
So you're like pushing and shoving so whoever's taking the orders can see you? Is that what it is?
Yeah, I just want other guys to get the hell out of my way. And I didn't want them racing me. So the problem was, if you were a local and you got all the orders, everybody else is going to try to screw you.
Yeah.
So you might as well be screwed with all of them versus just some of them.
It sounded very violent back then.
Well, it was orderly chaos. I mean, the Merc took a very dim view of that. They'd find you, they'd kick you out for a while.
So I find this funny because you cuss a lot. I do too, and some people complain about it. Back then, it seemed like everybody cussed a lot. Was that a thing that happened in the pits?
Oh yeah, you weren't going to write a soliloquy. Just fuck you.
So
but the guys that made the real money were, some of these owners of clearing firms and really big order fillers that came out of the meets that made money in the gold. I mean, huge amounts of money. When I came down, I didn't have an economics background, and I'll never forget the conversation I had with a kid who was like the first, big order filler in the yen pit when it went from blackboards to actually physical orders when the volume picked up.
Yeah.
And he looked at the yen was trading at $360 yen. Okay.
Okay.
Here. Just to give you an idea, I'll throw this up just for grins so you can see what I'm talking about. Here's life of yen, okay?
Yeah.
This is when it started out at 360. When I came down to the IMM and it started really pit trading, it was around 300.
And this is, by the way, you're showing the 1980-70 region right now. This is like yearly almost, it looks.
Yeah, that's a yearly.
Okay. So you came in there, man, this son of a bitch went down a lot, unless I'm looking at it wrong.
Yeah. So the guys that made huge fortunes, a lot of guys made huge fortunes in the currencies. Guys like Ira and a lot of these order fillers, because they had a fundamental idea, and they said all the stuff was undervalued, and they bought it. Okay.
Yeah.
And he said, I'm only filling orders because I'm long yen and I'm never getting out of it. And that was his idea. The other one was Let me just see where it is here on my screen.
That looks like it didn't work out too well.
What do you mean didn't work out too well?
It went down. You said he's long. And
Look, this is dollar yen, not yen futures.
Okay.
It's the opposite. So here, I'll show you the other way. Here's the yen futures. The yen futures opened up.
Okay, this is the
in
70s.
1976.
Okay.
And what was that price? Of 33.97. So let's say, 34 cents. And it went to $1.30. This is just a monster move. And then the bigger move came right there at the Plaza Accord in 1985.
Yeah.
Which pretty much everybody in the Merc was on the inside of that. That was $1.1 million lot in the morning.
So this is what your one buddy said he's long in and he's never getting out.
Yeah.
Why would he just go long on it? I mean,
because he had a fundamental view. So you can trade technically or you can trade fundamentally, right? So the biggest trades are when you can get a technical level and match it up with the fundamentals and get the story right. And as the story goes, then you make money.
See, I talked to a guy who started trading in '87 recently, and he said the story is the best. I mean, that's what you need. You got to have a good story. Is that how you feel?
That's the fundamental side of it. I was never good at it.
Well, not just a story of fundamentals, but also technicals or whatever. Like everything just makes sense to you. Would you think that?
First, look, Tudor Jones,
yeah,
Druckenmiller, all these guys, Ira, some of the other guys that I've been associated with, they're all unbelievable technicians. Chucky Reeder, this guy'd sit in his bathtub and swing $250,000 an hour in the silver.
Yeah.
These people were the guys that were technically good and could match it with the fundamentals made a fortune.
When you guys looked at technicals back then, did you guys have to draw them out on graph paper or something? How did that?
When I walked on the floor, Barry walked up to me and he shoved a piece of graph paper and a pencil in my hand and he said, "Start making X's and O's."
Yeah, that's the thing. Because you and I talked a few days ago. Point and figure, that's what you're referring to, correct?
Yeah, so these are all point and figure charts. I still use them because there's no volume to it. All it shows you is price.
Can you explain to us? Because a lot of my viewers aren't going to really be familiar with it. How does it, what exactly, because you can obviously do it by hand. Just explain to us.
Okay, so, all right. So basically, I think CQG and E-Trade are the only 2 point and figures companies that are halfway decent. And CQG is good because Mather came and sat with Barry Lynn and I at his house in Aspen, and he was trying to sell Barry on putting CQG into the firm in the 80s. And he said, and he just looked right at him and he said, "If you don't have good point and figures, I can't use you." And so they have the only point and figures to look at.
So let's pretend you're drawing this by hand. What are you looking at to draw these things?
All right. So fortunately, I had one of the guys at CQG help me put all this in, so I don't have to do it.
Yeah.
So these little lines here are basically 80 to 100 point swings.
The lines that are going through the O's?
Now, you see this little purple line right there?
Yeah.
All right. So this is just basically bell curves.
Okay. And it's all volume, correct? Or points in movement?
No volume.
No
Just
volume.
points and movement.
Okay.
Volume's irrelevant to the study.
So you draw a circle for how many points of movement?
On this one, it's it's going to take right now off this last low of 57.20.
Yeah.
It's going to take a 5,800 print to turn up. So then what I do is I go to the smaller time frames. Here's a 50 by 3. That's basically half the movement.
Half the movement of the one we just looked at below.
Yeah.
Okay.
And then here I have a 25 by 3. So when we trade in the room, the minimum trade I'm looking for is a minimum of 25 points, or I'm not doing the trade.
And that's currently or back then?
Currently, it's taken me decades to get to this.
Oh, to your current system.
Because I was trained as a hamster, and you have to undo all those bad habits.
What's a hamster? Because most people aren't going to know.
Short-term traders that are looking at 5-minute, sub 5-minute charts and clicking the mouse.
Yeah, that's me.
And they don't see anything because you have no concept of where you are in relationship to what the market's trying to do.
And when you say what the market is trying to do, that's you're looking at everything, right?
Here, let me show you a chart just to give you an idea. Well, here, I can stay with gold, or I'm going to show you the bonds. Which one do you want?
It doesn't matter to me. Gold?
Okay.
Let's do gold.
All right.
So see, you're looking at a lot of shit. You got Russell, you got ES, you got.
I'm looking at a lot of relationships.
Okay.
Because I want confirmation in the relationship that it's right. Okay.
Because certain markets move other markets specific ways. Does that sound correct?
Well, if money comes out of one place, it's going somewhere else. Okay. So money's, as Ira likes to say, money's fascist. It's going to the highest rate of return.
Oh, all right.
So there's rare times when money will come out of the equities and it won't show up into the financial, won't show up in the interest rate quadrant. Or let's say everybody puts their money, it used to be everybody would put their money in Eurodollars just to sit out the next day or so to try to figure out where they wanted to place their money. You'll get those sometimes where you'll get a 12 or an 18-hour lag on where the money goes next. But pretty much it's instantaneous.
Interesting. And so as the money's flowing in, are other people as savvy as you?
No.
No, that's just the way the market works, I guess, right?
No, there's only a few people in the world that look at put the board together like this, and they're all huge global macro hedge fund guys.
Then how's the money know to go to all these other products? Just because they have the higher rate of return and it's common sense?
Yeah, it might be for safety. It might be for gold went up not because of inflation. Anybody who said gold went up because of inflation is an idiot.
Fuck, I'm an idiot.
Okay, so gold went up because people were losing faith in central banks.
Oh fuck. Okay.
So and the demand wasn't from the United States. All right. Here's this gold chart, and I'll show you the next one later. Okay. This is the 76 low. Okay.
Yeah.
And when I got my seat, I think it was. I think we got the gold pit around 77 or 78 in Chicago, and then it went to 880. So this is a log chart. this is not, I want to show you the difference. There's a linear chart. What does that tell you?
I don't know the difference.
Well, look at this chart and tell me.
It looks flatter almost, and then it.
Well, look at the extensions.
Okay.
Okay. So see how it doesn't show you anything?
Yeah.
Now, if I go to a log chart, it's a percentage move chart. So I know where the market, if I look at this, you can see how it's sort of, it pretty much honors the fibs on the way up. And you can see above, you got two swings that you're looking at. And this is all part of becoming a chartist, okay? You have to know what you're looking at, and pretty much nobody does.
You know what's interesting is you got a lot going on, and I would definitely categorize you as a technician. Would you agree that you're...
Oh yeah.
And it seems like there's this thing going around where a lot of people think technical analysis doesn't work, but
well, yeah, because you use it wrong.
How do you use it?
Well, first of all, you don't use short-term Fibonacci work.
Okay.
Because I call them fib idiots.
Okay.
If anybody uses a Fibonacci on a daily basis, you're out of your mind. Let me show you a chart. Let me just show you. I haven't changed this chart in a while.
You're really looking back at these products from the dawn of inception. Like
you have to.
Like since the 70s and shit. It's crazy. It's crazy.
All right, look at the bonds. The bonds haven't been following the yield chart. It's been following life of futures.
Okay. I've kind of know that because I traded bonds before and I knew they inversed and shit.
No, but here, look at this. Yeah. This is charting 101, okay? And this
is this a log chart?
What?
Is this a log chart?
No, this is a linear.
Okay. Okay, so sorry to interrupt. So you're saying this is charting 101. All right, we're about to get schooled. So let's see.
So here's the low in 1980.
Yeah.
That was the end. That's when the interest rate policy changed, and the interest rates were around, for a mortgage, they were around 16%.
Mm-hmm.
And that's when gold hit 880 right there.
Fuck. Mortgages were 16%?
Yeah, yeah. Trust me, I had one.
Oh, Jesus.
And then as the rates went lower for years, 82 was basically when the S&Ps broke out in October of 82 and took off as the rates were going lower. So as the rates started coming down, people started putting money into riskier assets.
Mm-hmm.
All right. So the bonds on this chart, what's beautiful about it is I know how it's coming down. Okay. I had proprietary work that told me that this was it. This spike high was a swing count I had. It went there in the middle of the night, and I was like in shock. During the day when I put out the target to everybody, I said, I got like an 87 a 187 and change target. It went there at night on a night that the S&Ps broke 500 points.
Man, bonds really took a shit since 2020.
Okay, so now it starts going under my proprietary numbers. I want to be short. Well, everybody wants to buy them all the way down. And, we got into the 150s, and, some guy started giving me some fundamental psychobabble. And I just said, I just said to him, he's no longer a subscriber because I couldn't deal with the nonsense, but I just said you're dead wrong.
So you knew it was going to dump like you're
Look,
showing.
I know it's coming down to the 50%.
How do you know that?
Because I've been looking at it for 50 years. It's
Okay,
just empirical observation.
Okay. How did you know that price? There's got to be some technical analysis or something going on.
Yeah, it's a life of contract Fibonacci retracement.
Okay, can you elaborate and explain what this means?
Okay, that's why I don't use Fibonacci work on short time frames.
Okay.
I only look at it on long time frame views. And look at how it moved. It went down to the half, held it.
And that's the Fibonacci 50%. Can you show me where the top
life
of
of
it
contract, that's going to be huge.
Okay. What is life of so life of the you're measuring the Fibonacci of the entire fucking concept. Okay.
Yeah,
all right.
That's why I don't look at a 10-year chart, because it's bullshit.
Holy shit.
Okay, you can't see what's going on. You need, the more data you have, the more accurate your vision's going to be.
Yeah.
All right. So the first time down, it holds the 50% and goes all the way back up to the other fib.
Now before you
move like that, it goes from fib to fib.
Let me just interrupt you here, because you're saying it's going down 50% life of contract. How did you know during COVID that it was going to potentially retrace that far? Was there
COVID was irrelevant. That's just how markets react.
I'm not following.
Markets have a certain behavior, okay?
Okay.
They always repeat. They always do the same thing. I don't care what the market is. It's always the same. My work doesn't change. The way I analyze the market doesn't change. Nothing changes.
It's been the same.
The same.
So it's been the same since the chalkboard era, the outcry era. It's behaved the same way, and it always will.
Yep.
Okay. So there's a specific behavior on this product.
It's the same with every product.
So when this pulled to that 50% level,
well, that's an exit zone for sure. It's 100% you get out.
How did you know to initiate the short from a technical aspect? How did you know to get in it? Because that's a big fucking pullback. How did you know this is the moment and this is going that far?
Well, because it's a 95% rejection level.
Where?
At the 50%.
Okay. Oh, so it has a high percentage of rejection. So what you're saying is the life of the Fibonacci, when it gets to a certain area, there's a percentage of rejection. Am I following you right?
It's over 95%.
Okay.
So in other words, if you get down to a level off of this alpha over a big move, that's a get out of Dodge for a directional trader. Because you're going to get another look at it, okay? Okay. And it went all the way back from one fib to the next fib.
Oh, I see. I see that bar. It went to that 382 blue level.
Yeah, it went back to the third.
It's called the third.
Screwed around there, and then rolled over again. Went back to the half, but this time, it didn't hold the half. It came down to the next major fib, which I call the screw you zone, and that's been the ultimate zone. So when it hits a zone like that, minimally it's going back to the half, and if it's really big, it'll go back to the 382.
Why is it called the screw you zone?
Because it's just a stick it in your ear level.
Oh shit. Do you have to continuously drag the Fibonacci up every time it hits new highs?
No.
No?
I mean, well, this is a life of contract.
Yeah.
Look, it depends upon what
hit
you're
new
making.
highs in 2020, so wouldn't you have to drag the fib tool up to the highs, the all-time highs?
Well, I don't care about this swing coming back up.
Okay.
I'm looking at the whole life.
Okay.
And I do these fibs a little. Here I've got another one. Where did I put that one?
Did you look at fibs when you traded in the pits?
No, I didn't know what the hell a fib was.
Okay, this was later down the line. So you're doing point and figures back in the pit.
Yeah, I didn't know what a fib was. But people that, you asked me that question yesterday as to why people didn't make the pivot from electronic.
Yeah, let's get into that real quick. Let's kind of take a step back. So you started doing point and figures back in the day, and this is based off movements, correct?
Correct.
So you're drawing this shit on a piece of paper, and so each zero, why are some an X and why are some a zero? If you could go
whether it's going up or down.
Okay,
the X's are up, the zeros are down.
Okay. And is each zero or an X based off of 5-point increments, or it just depends?
This one's 25 points.
Okay. And when
this one.
Okay, so those are 25-point increments. So every zero is
this one's 50.
So each X is 50 points.
No.
Oh.
From move to move, from when the X's go up to come back down, it's 80 points, 80 to 100 points.
Okay.
So look, I don't use Fibonacci because I use the cloud.
Yeah, the Ichimoku cloud.
So I don't have to sit there. Look, I look at thousands of instruments for RIAs, for hedge funds, for whatever it is. People ask me, they asked me to look at stuff I've never looked at. Like in the 2010 or 11, I had a huge hedge fund that I was consulting with because, they get, research from all the big banks from the desk because they're trying to get you to trade. Okay.
Yeah.
And they would send me all the research to ask me yes or no. And then ask me about trade location and what the risk reward was. And I'll never forget the conversation I had with this head trader. He used to work at SAC. And he said, Jud, he said, look at Netflix. It was trading at $25.
Mm-hmm.
And he said, where do you think it can go? Well, I said 50. He said, shut the fuck up. He said, if I go back to my desk and tell them that you give me a $50 target, they're going to shoot me. I need long-term projections. And I said, okay. So I took another look at it. It says it's going to 250. It went there in 2 weeks.
How the fuck did you know that?
It's technicals. So they had a fundamental reason why they were doing it. They wanted to match up their fundamentals with the technicals.
I mean, was it the Ichimoku cloud, your point and figures, and your Fibonacci's that told you?
Yeah, all that kind of stuff that I've learned over the years.
Were you also watching the flow in other markets to know Netflix would do such a thing?
No, I had no idea. I didn't know what Netflix was.
So basically everything you're looking at is a crystal ball.
Yeah. So these guys, I mean, they happen to be one of the top 5 holders in Netflix. And every time an earnings came out, they'd buy calls because they didn't want to, they couldn't buy any more stock because they had so much of it. And they'd make, $200 on another $200 on the upside on an earnings call on their options, and they'd sell those up and keep their core positions. And that's how they levered them all the way up.
So I'm curious about your point and figures. You said they're like profiles, right?
That without, see, this is pure price.
Because when
The
I look at
profiles
it,
have
it looks
volume.
like a tic-tac-toe gibberish of a mess. You know what I mean? So like when you look at it, when you look at point and figure, like what is that telling you? You said it's pure price action, correct?
Right. Well,
Okay.
okay. So here's how, look, I'm an empirical learner. Okay.
Yeah.
I'm not I can't learn. I'm really bad at reading a book and trying to discern it. If I see it, I can compartmentalize it and I can understand it.
Yeah, I feel
So
like I'm the
let's
same
just
way.
look at here. Let me just make it real easy for you. Let's just blow this up. Okay. And let me take off the cloud.
Okay.
Does that make any sense to you?
I mean, kind of. It looks like a bar is on a bar chart.
Okay. Now look what happens if I put the cloud back on. Where's my thing here? I'm blind. There it is.
There it is.
Okay. So now it gives me context.
Oh, okay.
Now I don't have to do fibs because the green line is basically a 50% line. It's a balance line. It's a 50% line. I use this as momentum, and then I have my averages in there to match up with it. But when you see, hold on.
So Ichimoku cloud is your context on price action.
Yeah. So, okay. So, you can see here that there's a double top, right?
Show me. Where's the double top exactly? It's
Right
between
here.
that X and that O right there.
Yeah. So there's like a little double top.
Uh-huh. I deal with double tops, so I'm following. Okay.
Okay. So now if I go back to
Hell, there's a fucking
put
triple
a cloud
top.
on it.
There's a triple top all the way at the high.
Right.
Okay.
So if I put a cloud on it, right?
Okay, you got that green.
I can see the balance. I can see it put an X in above the cloud, but I know that's garbage because there's the balance line there.
That's what the balance line is, correct?
Yeah, it's a 50% line. So until I see price action above there, this is an exit zone. Came back down, filled out, and it went again. Now, how do I know what the low is?
Yeah, how do you know what the low is?
Well, again, it goes back to looking at the right charts. Okay, you're looking at a mini chart, aren't you?
Yeah, because I'm a hamster.
Yeah. Okay, you see this gap?
Yes.
That's Friday to Monday.
I remember. Yep, I remember that shit.
Okay, well, here's the minis, but it's not going to be as precise as this is. So it's a U.S. session chart. Came down there and filled. Here, let me put the NASDAQ in there. The NASDAQ filled this morning.
What do you mean it filled?
It came down and filled this gap.
Oh, okay. Okay, gotcha.
Now the big thing. Now, do you know what's important about that level?
Which one? The one you're highlighting?
This gap right over here.
And that's the E-minis?
Yeah, that's it. Yeah, that's the minis, but it's a U.S. session broken out.
So I wouldn't know the importance of that gap.
Okay, now I'm going to show you. Because you don't see it on the time frames you're looking at.
No, I don't.
All right, there's the daily, the weekly, the monthly, the quarterly.
Okay.
What is that low? That's the quarterly ORL number. That's the point of control for the S&Ps.
Oh, you said ORL? What does that mean?
Higher high, lower low, ORL.
Okay.
So you're always looking for stops below those levels or above those levels. That's where the market buy and sell stops are.
Really?
Doesn't matter whether it's on a quarterly chart, right? Or if it's on an hourly. I mean, you can see it
Wait,
here.
so you're saying the high of a bar?
Well, here, right here. Look at this hourly chart. Okay.
Yeah. Can
All
you
right.
make it expand it for us, if you don't mind?
Sure. This is an hourly.
Okay.
And this pink stuff, that's Wednesdays.
Okay.
So Wednesday made a higher high. I had a macro number up here, a huge, huge macro number, which is, for me, which is an enormous number that will never go away. Okay.
Okay.
It rejected up there.
So you're just real quick before you continue. You said there was a macro number made up there. What number was that?
It was 58.40.
And this is a technical level?
No.
Or it's a news catalyst?
No. It's stuff. It's proprietary work that I do.
Okay. Gotcha.
And I generate this stuff quarterly.
Gotcha.
So the big thing, Kat, is the reason people fail is because they don't have a process, they don't have a methodology, and they're trading in the middle of nowhere, and they have zero vision.
Gotcha.
And they're too lazy to do their homework.
Yeah, I would definitely say a lot of people don't do the work.
Yeah, and they all want to come in and they all want to click the mouse and have a jet.
And then, yeah.
Doesn't work that way. So
this is a proprietary number that you come up with through your own system.
Right.
Okay.
So it came up there on Tuesday. And, it couldn't get through. And then it tried again on Wednesday.
I remembered this. I remember trading around this.
All right. And then it went back up there on a Wednesday.
This would be yesterday.
Yesterday, and started coming back down. And once it came back down through 2075, it was adios.
Can you show us where that number
is? A hard
is?
number and a point of control at 2075.
Show us where 27.5 is or whatever. Where's
right
that number?
there.
Okay.
Hold on. Let me just.
So it's adios. It's going down, and it's going to go down because it's going through these lines. I take it on the Ichimoku.
Yeah, I mean, you're going to get speed bumps all the way down, but the point of the exercise is that you know where you're wrong if you initiate it early. Then it just becomes unit size as to how you manage the trade to come down.
To me, it looks like it was crossing those lines before, like it.
It was just it was just going sideways.
Yeah.
And you didn't know Wednesday morning, yesterday morning, I didn't know whether there was enough juice to push it through or it was just going to roll over and die again.
So when did you know specifically?
Well,
what
it took
time?
like 20 minutes.
20 minutes. And is it because it was going into that cloud?
Well, it was just, it was just going sideways. Look at it.
Okay.
It would been going sideways all night.
So when did you know it was done? It was going down. When were you like, oh yeah, this motherfucker's going in?
Well, picking highs and lows, you can get the level right. You just don't know how far it's going to go when it starts.
Okay, I got you.
Okay.
You need to let the trade breathe. You need to let the trade breathe, is what you're saying.
Yeah, that's a whole other conversation about how long a market takes to turn, whether the technical models are up or down. It's a whole thing.
Okay.
And what days in the week are the high probability extremes?
Why do you sometimes use bars and then you use point and figures?
Well, because the bars show me one thing, and the point and figures show me this, break out the smaller moves.
So
right now you need here. Let's look at this point and figure.
So as
you
you say breakout. Okay, go. Sorry. Continue.
Here's this. You can see this whole consolidation period down here. I mean, it went down
S&Ps,
to
right?
20.
This is the S&Ps, and
Yeah.
how? Okay, this is intraday currently.
This goes back days.
Okay, so where's Wednesday at?
The Wednesday is not broken out on the point and figure.
Okay.
But that's Wednesday.
Okay, gotcha.
All right. So anytime it gets near a cloud, as you can see where it bottomed out down here on Friday, it held this area at the top of the cloud and took off. The cloud is support until it gets into the cloud, and then you got to see if it's a false breakdown into it or not. But it gives you risk management down here.
Okay.
And, it also, today's low right here, just above the cloud, matched up with that gap fill.
Okay.
So what I do is I look for what I call matches.
Multiple factors of support, right? Multiple factors of support?
Yeah, or
matchups.
Yeah.
Gotcha. That's what your terminology is. I see. So you want to see multiple things aligning.
The more things that align, the better the trade.
Hell yeah.
Here, I got to give you an example here.
Yeah, let's see that shit.
All right. This is my pattern recognition stuff. Okay, we got an ORH day going on in cattle. All the cattle contracts.
Just real quick, so on that ORH, you're saying there's stops around there. You're saying there's a stops around the high and the low of a bar? Is that what that?
Yeah, so here. You can go to my website, and I've got a vocabulary.
And I'm going to link your website in the description for anybody that wants to check this out.
So I have a vocabulary, okay? Yeah. And ORH and ORL patterns aren't always necessarily good. It's predicated on whether it's at the top of a move or a bottom of a move.
Okay.
In which way it is. Like if it's an ORL at the bottom of a move, here, let me give you an example. Replicate that. You see this? This is gold denominated in yuan, gold denominated in yen, gold denominated in euro.
Okay.
So I know that if I'm along gold, well, the first thing it tells you is whatever you do, don't be an idiot and sell it. Okay?
That's what the charts are telling you?
Yeah. If these are going up, you don't want to sell gold because the demand's coming from offshore. It's not coming from the United States.
Okay, so this is sort of your money flow theory. You don't want to do that because the money's flowing into it. Would that sound right? Okay. Yeah,
so you can buy a break. Now, this morning I sold out some of my gold ETFs and I sold out some of my silver. And it was probably the wrong thing to do, but I did it. Okay. And the last chunk of gold I bought was like at $150 lower. So, I took some money up here. Okay. I'll take a look at it next week. Everything's time frame and how it's moving from A to B.
Can you show us that trade you're going to show us with the matches?
Yeah, hold on a second. What were we just talking about? I lost my train of thought. All right, here we go.
You got it? Cool.
You have to realize I'm old and senile.
How old are you?
73.
Oh, shit.
Okay. So here are the bunds. Now, this is a German 10-year.
Do you still think you're as sharp as you were as a trader being?
No, I'm fortunate enough to be in a room with a bunch of guys that all follow my methodology and our
They can kind of like tell you what's up.
well, if I miss something, they won't,
Gotcha.
because they're all on my page.
So it's almost like team trading in a sense.
Well, yeah, but if you have enough guys, like I might miss something, one of the other guys will pick it up and say, "Judd, look at that," and then I'll look at it.
There
Okay.
you go. Yeah.
So we use dates, we use point figures, and we use clouds. Dates are important. So here, this was the election high and low when Trump got elected.
Okay.
Okay. Here's the cloud. So back here was my last buys in the gold. In January 14th, the Bunds put an ORL move in.
Now, just real quick, how does gold and bun sort of relate to each other?
Well, I'll get into that.
Okay.
At the bottom of a move. Okay.
Mm-hmm.
This is the bottom of a move. It puts in an ORL. That is the lowest probability follow through pattern you will ever see. Now, it doesn't mean they can't open lower, but they'll come back and show you the level again. Okay.
Okay.
So the same day, so I looked at that and I said, whatever you're doing, you don't want to be short the bonds.
Because it's a low probability.
Very low. Here, let me show you the bonds.
What makes it low probability?
Look at where the bonds were at 111 and change.
Okay.
So, that to me says if the bonds are going to go up and the rates are going to ease, people are going to buy gold. So the easiest trade, if you're not trading the rates, is to just buy the gold.
Okay. And it's based off of these like low probability levels and in one product, and then the other one's telling you something as well, technically, and you're getting a match.
Yeah. I mean, okay. Here, look, there you go. Gold against the 30-year bonds.
So this chart is gold against 30-year bonds. These are kooky looking charts.
What?
I said these are crazy looking charts because you're looking at stuff that's like this against that, and it's a chart.
You want to look at relationships and see what's leading.
Oh, fuck. Okay.
So, I got a clue that, if you looked at the gold that day, it was just kind of sitting around.
Mm-hmm.
But because I saw the Bunds, it told me that the gold low was good.
Yeah.
Now, I've seen days where, in front of an ECB meeting, Ira was driving through West Texas, going to Arizona. He's on the phone in the room. And I go, I'm getting long gold. And he goes, what? You can tell he's frustrated because he doesn't have he's on a phone. He doesn't really have any trading connectivity.
Mm-hmm.
And he said, what? And I said, gold and euros putting an ORH day here. And it's in front of an ECB meeting. And in ECB meetings, generally, the ECB comes and intervenes in the European rates and rallies them 100 or 200 points. When Lagarde makes her statements. So that was just gold was up $80 in the morning and the silver was up $1.50. You can get triggers off of the relationships.
Okay.
It's all sense. How you set up your board to see the world.
And this is how you set up your board.
Yeah, everybody's different. Some guys, it's all horizontal. I've got guys that have never, they're all computer driven, so they've got a different look. This is how I learn to, bring data into my brain.
That makes sense, man. I've talked about this shit. It's a foreign language, and whatever you're looking at is a way to translate that into something that makes sense to you. Why do you like Ichimoku clouds. I did a lot of research on them way back in the day. I used to use them. Why do you like them?
It just gives me context because, all right, there's Golden Euro, right? Here, let's just go look at something else.
Like, when did you first hear about Ichimoku cloud and you're like, yeah, this is it?
Well, it was through Stan Yarbrough at CQG.
What year?
I don't know. It was like 14 years ago.
Okay.
He didn't bother explaining it to me. He just said, throw it up and just watch it for a while.
And it started to make sense.
That's how I learned.
See, I'm familiar with it, and I think that's fascinating you use it.
So if it comes, and the reason you use it is because every single currency trader in the world that was big, they were all out of Japan, all use it. That's all they use.
Holy shit. So all the currency traders back in the day were in Japan.
They've been using the cloud since the 80s.
Yeah, that's what I've heard.
So
it's still being used, do you think? Well, obviously,
yeah,
you
and
use it.
they're not, and they use the standard parameters. They don't change them. You just look at the semis. Okay, this is the SMH, Van Eyck vectors. Comes down to the bottom of the cloud. You want to be short down there? It just filled out the whole thing. You get out and you wait if you want to be short, or you can buy them there for a trade. Goes back all the way to the other end tries to go to the upper part of the cloud, and now it's coming back down again. So now you take that trade and you go out your time frames and take a look at it. Look at it on a quarterly. That's ugly.
Why is it ugly to you?
ORH quarter, close to a top of an all-time move.
Is the OHR where that red dot is?
Yeah. So it made a higher high from the quarter before and a lower low.
Okay. Is that how an OHR is made? It's a higher high and a lower lower of a prior bar?
ORH should be the same thing the other way.
Oh, and it can be on the inside of a bar. So if you, okay.
So it's whether it's up or down here. Like cattle today came down into the averages, momentum, and is putting in an ORH day.
So it's a wider bar than the prior. Is that correct?
Yeah.
Okay.
Yeah, it violates the prior bar both ways.
Oh shit.
It resolves
saying
either up or down.
You're saying there's stops around.
There's always stops below and stops above. And I don't care what time frame.
Of the current bar or the prior? When you look
prior. So if this is the prior bar, when it comes up above that bar, they're buy stops. When it comes back below it, they're sell stops.
That's every bar or just the OHR bars?
The OHR bars.
Okay.
Or the ORL bars or whatever.
Oh, so there's another kind, ORL.
This is ORL.
Where?
Hold on. Okay. The cattle's ORH, okay? And the semis, that's an ORL.
Why is this one an ORL? Can you show?
Well, because it made a higher high and then took out the previous quarter's low.
Oh, fuck, I get it. So what you're saying is if it bumps out the high first and then it comes down, that's an ORL. And if it blows out the bottom side first and then goes out the top side, it's an OHR, correct?
Right.
Shit, I'm fucking getting it.
All right, so here, let me show you something real simple. So we went back over this before. I showed you on the pit low, right? Here at 57.20, and then once it went back above the quarterly 23, it bounced again. It didn't get very far. Yeah. All it did was go back into the momentum lines on the hourly, the 90, and the 240-minute bar
That's
chart.
the ES.
Yeah, and that's the ES. It doesn't matter what it is. It doesn't matter whether it's pig shit. It all does the same thing.
Pig shit? So there's a pig shit. Is that what you call hog features?
It doesn't matter. I think they used to trade urea on the floor or something. But, it just doesn't matter.
So when you have those stops, are you looking to play that shit or you use it for context?
Well, yeah, it tells you something about the market.
What's it telling you?
Well, if it goes below it and comes back above it, you don't want to be short.
Okay.
And if you want to be long, then you put a stop below the low. And go close your eyes till it gets somewhere where you like.
It seems like you've been cultivating different technical indicators and charting stuff over the course of your career.
I paid a guy $300,000 to learn all this stuff.
To learn what specifically? Was this in the pits? What,
well, I had a trading group in the NASDAQ.
What? So this would be about 2000s, roughly. 90s?
Well, I started with this guy in '95.
Okay.
He was an old floor trader.
And this is the guy
Probably
you
the best
gave
technician who's ever lived.
So this is a guy you gave a bunch of money to.
A lot of money.
So this is bad. So at this point, you're on screens, correct?
No, we were still in the pit. I mean, this guy, I was paying him $15,000 a quarter.
Okay.
And he wouldn't give you the work until you paid him.
Why did you decide to give this guy a bunch of fucking money? What are you trying to learn from him?
Well, his cycle work was incredible.
What is that? What is cycle work?
Markets have a rhythm to it.
Oh, the cycle of the market. Yeah.
Yeah, or cycles, okay? And his work was better than, all these guys use sine waves. It's garbage. It wasn't this guy's work.
Yeah.
And he used cycles of the fibs.
So this guy was crystal ball in the future.
Oh,
and you noticed it.
Here, I'll give you an example. There's one day, it was on a Monday.
Okay.
And it's a cycle high week in the S&Ps. And he only gave his S&P work to 3 people. Ira, myself, and a guy at Goldman.
Because you gave him a lot of money, correct?
No, because he said the other guys were a bunch of fucking infants that couldn't use his work.
Okay. So he saw something in you.
So, no, we just knew him for a long time.
Oh,
so
or that.
So, it's a combination of a lot of things that I've learned. It takes decades to learn this shit, and I teach it in a course. How to take a target. He said, well, it's got to trade this price. I've got this price that's going to print it.
Okay.
So it printed it on Wednesday, and we broke 400 points in the S&Ps. Now, this is in the 80s.
So when that happened,
89 or 90.
So when he told you that, you're like, holy shit, this guy knows what's up.
Well, I sold it there. I sold the S&Ps. I called up Barry upstairs. I said, it's a cycle high week in the S&Ps. You got a target up here, and just sold them. He sold his entire stock portfolio that was being managed by Wasserstein Perella. He went short against the whole firm.
And he fucking
So
crushed
we're flying on a jet going out to Aspen for the weekend, and he goes, yeah, I'm still short. I said, well, I made 80 handles on the trade. He goes, yeah, I'm up 400 right now.
And that's when you were like, shut up and take my money. Right?
Yeah, everybody's got a different time frame. And he had a different agenda as why he was doing the trade. Because he thought the traditional money managers, they're a bunch of monkeys.
When did you guys transition from, like, what year was it transitioning from pit to screen? 2000s? Somewhere in the 2000s?
Yeah, well, just after the NASDAQ died.
Okay, so you met this guy before the NASDAQ, correct?
I met him in 1977.
When did you start paying him?
in the 80s.
Okay. And what were you learning specifically from this guy? Market cycles?
Well, he wouldn't teach anybody how to do the cycle work.
Oh, so that was like proprietary.
You know, you got the cycles, you got them a quarter out. You know, he give you the targets, the technical model work, and then you had to put it all together, and people couldn't put it together. And the one thing I learned from him, from following that body of work, and also working with a guy from Goldman, who was the chief technical guy at on their prop desk in New York in the 80s, was that you only wanted one number. Period.
What does that mean? What?
Well, if you can't trade one number, if somebody gives you 10 numbers and they're always going to tell you they're right and you're wrong, doesn't help you.
Wait, what do you mean? What is a number?
Well, let's say a guy gives you 10 different levels.
Oh, okay.
Well, I don't give you 10 different levels. I give you a resistance, and I'll give you maybe one support level. And anything in between, you're an idiot.
So when you say one number, you're talking one fucking area.
Yeah, that's it. And markets move from one big area to another.
And that's what you learned from this guy you paid a bunch of money for?
Well, it was a journey. Okay. And then I took his work and I spent, years in the wilderness trying to come up with a plan that I could execute that made sense.
How many years do you think you spent?
6, 7.
Jesus fuck. Yeah, I tell you this, the guys that think they can do it in one fucking year, I'm like, there's no way.
Well, I've traded, most of the time it takes me 6 months to a year to trade somebody, so they're dangerous.
That's a pretty short period of time.
People don't want to put in the time and the work that I want them to do it.
You want them to work hard.
Well, I want them to read the paper, like the FT or Bloomberg or Guardian or stuff like that, not the bullshit you see on TV. And so they have a sense of, what's going on in the world.
Yeah.
There's a lot of different ways you can make money, but if the bigger money's made from a global macro perspective, where you can put them on and keep them on.
And then your context is knowing how the money flows, where the best rate of return is, basically.
Well, you can see it. You see it coming out of one market and into another.
Yeah, I'll say this. You look at a lot of shit I never fucking heard of.
Well, that's because your generation, the exchanges, all these guys that, futures, radio or whatever these guys did, all they want you to do is click the mouse and lose money. Because that's how the exchanges and clearing firms make their money.
Yeah.
Is you clicking yourself to death. I quit trading in like 2003 for a while because, I was trying to trade the currencies and there was no liquidity and you couldn't get in or out. Every time you put it on a trade, it was a loser.
So you were kind of like trading your brains out back then, and then you stopped in the 2000s. Was that because of the tech boom and bust? Yeah,
well, the liquidity dried up. I mean, we were trading. I had a bunch of guys in the NASDAQ, and we made 10 figures in a year.
Jesus.
And I had them on headsets. and I was trading a ready system just to, I just sit there and click, 100 shares at a time, up and down in Sienna, Rambus, to see when stuff was hard to buy or hard to sell. And I knew which way the arbs were going to go. And I knew which way the arbs were going to go before everybody in the pit did, except for my guys.
Were you fucking the arbs over?
Well, you couldn't.
Okay.
Because, like Susquehanna could lay off their trades. So let's say we had 400 or 500 big NASDAQ on, and we had 40 to 60 points in it, and we'd scratch them because we couldn't get out of them, and Susquehanna never came back to the pit to sell them. It was synthetically just arbitraged off into all the stocks.
And did that make what you were
doing? Well, that's why all those arcade guys went broke.
What's an arcade guy?
They were the kids that never were on the floor, that got, they worked in prop shops, and they were just clicking the mouse. And it was a video game. And some of these guys made massive fortunes. I sat in back of a kid, he was making $1 million to $2 million a month. Okay.
And something happened.
He went from that to losing 100,000 a month to 200,000 a month, because what was happening was that these guys would be, they were trading 4,000 contracts at a clip. And what happened was that they would try to manipulate the screens, spoof the market. And then when whoever they were trying to squeeze the other guy out so they could get out. Well, what happened was that Goldman just took the trade and arbitraged it and never came back to the screen.
And when this arbitrage stuff started coming in, it started killing the arcade guys. Is that what you're saying?
Oh, crushed them. And none of them had a skill set. They didn't know how to chart. Everything was a video game. And they had no structural basis for what they were doing. I mean, some of the biggest money makers of all time in the 70s and 80s, these guys were all technicians. But they come in and Greenberg came in. He owned Heinold Commodities, made a fortune in the means. He came into the gold pit one day. I don't know, this is 70, 79, 80, early, yeah, it was 79. Came into the gold pit and he bid. So everybody bid. So he hit everybody. He sold everything to everybody. Whatever their number was, he sold it to them.
Yeah.
And then he just bid higher and kept on buying. Thousands and thousands of gold futures.
Was this an arbitrage guy?
No, he was just straight out.
Oh, wait, this is back in the 70s. Gotcha.
Yeah, I mean, Ira used to work was a partner of James Sinclair. They had a currency arbitrage. They made a fortune in the currencies. And I'll never forget it was on Wednesday before the Chicago Mac in the summer. And and Sinclair gave him an order. And the order was to buy until I tell you to stop buying.
So I noticed you keep mentioning Ira. How's this person's relationship? Like, how did you?
Ira and I, he started a couple of years after me. He's probably one of the greatest global macro guys ever. He's in all the books with Besant, Trading Wizards, all this stuff. He's a fundamental guy. He was an econ major from Madison. Brilliant guy. But you'd walk into the office and he's giggling. And I go, what's so funny? He said, he's reading the Wall Street Journal. And he's looking at the bond offerings. They used to call them the tombstones. And he goes, well, I know which way every currency cross is going to go for the rest of the day. And why? Because he knew because of the bond offerings, he knew what the capital flow was going to be.
Capital flow is your system's name, right?
No, capital flows are, well, if they had to buy, if they had to do a bond offering in Germany and they had to buy D-marks for the offering, then you wanted to be long D-marks and probably short yen or something else, or short pounds.
So Ira's laughing about all this shit. Is this when you
Yeah,
first
he's just
met
looking
him?
at it because he sees it.
Is this when you first met him?
Well, no, we'd known each other for a while before that, but
Okay.
he saw it. Okay.
Yeah.
And then, Sinclair, he was a partner in Sinclair Futures in Chicago, Lenny Feldman, and he got this order. I mean, it was still one of the biggest orders of all time.
How big was
And
it?
it's in 1979. It's in July on a Wednesday, and it was buy until I tell you to stop buying. And the clerk at the desk, he's just, the market's breaking $50. Okay, the gold was in a $50 break that day, and he's just buying 100 lots, and he doesn't know how many he's supposed to buy. Jimmy just told him to buy until I tell you to stop. And then I yelled up because how many fucking contracts am I supposed to buy? And Rita yelled back. He said, anybody who talks to Jimmy's in the bathroom with a wet towel underneath the door, and anybody who talks to him before the close gets fired.
Why the fuck would he put a towel on the door? What was he doing?
He didn't want to know what was going on. He was that certain of the trade. Okay.
He stuck his head in the fucking sand.
So, everybody's different. He knew what he wanted to do. He didn't want anybody second guessing him, and he didn't want to see it. He knew what he had to do. And he knew what day he was committing on, and he just, all in. That was a low day for about a $600 straight up move in the gold.
Did he win on that trade? So you won on that trade? Jimmy won?
Won? Fuck. He made, that was like the low day for like $600. Straight up.
Do you think he was in that bathroom rubbing one out so he could calm down?
No, who knows? But, guys were different then. They were certain about what they wanted to do. They did it and they put them on, and that was it. Dittmer wasn't any different than the meats.
So is this, you got closer to Ira after this time, or
we'd always been friendly since he walked on the floor. We've known each other for 45 years.
I hear you talk a lot about him, so it's almost like you guys are like homies.
Well, I spent 15 years in an office with him, having him talk about fundamentals, which totally went over my head, and then I had to get good at that.
So you learned a lot from Ira.
And the guys that started me were all currency arbitragers. They were all fundamental traders. I just didn't have that background. I never saw it. It took me decades.
It took you decades to see this shit.
Yeah, and then people would ask me to, a lot of times Ira would get in the weeds on some of this stuff, in the fundamentals, and he used to write a blog, Notes from the Underground. And even in my website, in my YouTube channel, there must be 40 or 50 recordings of us talking real time and trading, matching the fundamentals with the technicals.
Do you still trade with Ira?
We haven't been doing that much recently.
Yeah.
But we still communicate.
So you learned
he's the first one that opens up my work every morning.
So
because he wants to know if I'm looking at something that he's missing.
Okay. So you learned fundamentals from Ira, like a lot of the.
Well, and a bunch of other people, but I'm not good fundamentally. I really am not.
Okay.
I can hear the story, and if it resonates, then it makes me want to trade from a side, a particular side. It makes me want to buy them before I sell them or sell them before I buy them.
Okay.
That's why you're listening to that. You have to trade whatever your forte is. Fundamentals weren't mine; they were his.
It's technicals for you.
Yeah, it's technicals for me because I wasn't good at the fundamentals.
And you learned technicals from that guy you paid $300,000. What was his name? The guy you paid.
Forget it. We're not mentioning him.
Okay.
But he was unbelievable.
So that's how you learned your technicals, though?
Yeah, that's how I got good at technicals.
And this was in the about 2000s, you would say?
No, I started working with him in the late 80s, all the way through the 90s.
So let me ask you this. You said the arcade guys died when this arbitrage stuff started happening. Sounds like technicians and technical guys were using technicals before that time. And it seems like when that shift happened with the arbitrage, the technicals still kept working. Is that?
Yeah, the technicals have always worked.
They never stopped.
They never stop working. It's just if you're using the proper technicals on the right time frames.
So certain technicals are for certain time frames?
Yeah, like I don't use Bollinger Bands, Keltner Bands, all this other bullshit. You can take that stuff and cram it. RSIs, I only look at, things can trade overbought or oversold longer than you think.
Yeah.
But it's just something I might look at. Pretty much, I don't need to see much more than just the cloud.
So for you, it's the cloud is the big one. The
Cloud, point and figures, and long-term charts. Here, I'll give you an example.
Yeah,
I'm going to give you an example of matching a fundamental view. I think it was 20, 21, 22.
What product is this? It's
this
USD.
is Japanese yen, dollar yen.
Okay.
So another guy came in. He's a client from Australia, managed billions in currency.
Your client?
Yeah, big FX trader.
Okay.
Used the same technician that Ira and I did. Okay? That's how we met.
So he's a client of your
system. The guy that taught me only rarely had more than 10 clients, ever.
When you say client, you're talking about people who learn your system?
Well, no, subscribe to him. My system's a totally different deal.
What do you have when you say clients? What do you mean? How are they your
subscribers?
Okay, I got you. Okay.
So here's dollar yen.
Okay.
Gotcha. So we're having a conversation. In I don't know, it was 21 or 22.
Mm-hmm.
And so Ira says the yen's undervalued. He's got a fundamental reason why he thinks the yen's undervalued. Okay.
Yeah.
So I look at the chart and I'm just looking at, this is 1985. That's a Plaza Accord swing.
So you just drew a fib tool.
I do a Fibonacci here. If anybody talks to you about currencies, anybody, and they don't do their technical work from the Plaza Accord.
What does Plaza Accord mean? The entire
run. Okay. The Plaza Accord is when they got together at the Plaza Hotel and made a pact with all these G7 countries to devalue the dollar.
Oh my fucking God.
Okay. So you have to know when these events took place. So the only swing in the currencies to me is the Plaza Accord swing.
Oh my God. So I mean, that makes shit a lot more complex because now you got to know when these events happen on these charts from fucking 20, 30, 40 years ago.
Well, we track them. We track easings, we track elections, we track all sorts of stuff. Sometimes I take the lines off. Sometimes I put them back on
Why are these events so important?
because they're fundamental changes in capital flow.
Holy shit.
Fundamental changes.
You got to give me a minute because, like, it's all starting to click. And, like, what you're saying to me is, like, right? Because at first I'm kind of having a hard time understanding what the fuck's going on. And the more I'm talking to you and asking these questions and shit, the more you're saying some golden nuggets where I'm like, oh shit.
Well, it takes, most people take 6 months. The people, a trial subscriber will come into the room, and it's like, might as well be Chinese. So they walk away. They won't bother to sit and listen and watch for a while.
Yeah,
Because I don't start with, here's support and resistance on a 5-minute chart.
what do you start with?
I start farther out and I go back in.
So my buddy Zero, you know who Zero is. He's been with you for fucking years. Is he doing the work? Zero, are you doing the work?
Oh yeah, he does it. He's really good at it.
So
and once the light bulb went out with him, then he just started clicking away. But he doesn't trade that much.
Yeah, he's been wanting
I had to set up for him in Bitcoin. I didn't even know it. He goes, well, I went down to your level in Bitcoin. I bought it.
Yeah, Zero's been trying to get me to look at this system. Just for my audience, my buddy Zero's been with Jud, who's speaking right now, for a long fucking time at this point. I've known Zero since the beginning, almost the beginning of my trading journey, not quite. And he's one of the only guys I know that didn't disappear, because they all disappear, right? And he's been trying to get me to look into this style forever, and I'm like, oh, it hurts my head. Now, having a conversation with you and him bringing you and having us meet, this is very interesting shit. I know for you it's like common sense.
Well, no, I mean, I've been doing it for 50 years. So it's second nature. And, the reason I'm still doing it is because, I had some health issues and, I really can't travel anymore. So, I just sit in front of the screens. It's easy. I get up, it gives me something to do, and I see it. It's like, I was a competitive sailor. And when I see, when you sail, and like Geneva Trading, pretty much all their prop guys were sailors because they could look up the lake and see the darkness on the water, seeing whether it was a shift to the left or the right, and set themselves up on the race course to take advantage of it. Trading is no different.
I'd agree to that for sure.
So the point is that to get back to what we were talking about, Ira had a reason why he thought, fundamental reason why he thought that the yen was undervalued.
Can you share that reason?
Well, we're looking at it right here.
Well, that's technical. What's the fundamental?
No. Well, this is part of it.
Okay.
Again, I'm not the fundamental guy. He is.
Yeah.
He had an idea. He's looking at these levels from 06 and from 15 and thinking, well, this is a place that I think I want to try it because it's going to reject again. Now, Andrew and I were of the, I looked at it and I said, the yen's going into the 170s.
Where's the 170s? Can you show us on the chart?
Up here.
Okay.
So I thought you were going to get a move closer to the 50% of the life of dollar yen.
Since that event, Yes,
Yes, it's a Plaza Accord.
Plaza Accord. Okay.
Yeah, so that's a what? That's a 4-decade move.
God.
So I'm
Damn.
looking at it over here when we started talking about it, and I think we're going here. So did Andrew. So we talked with Ira about it, and he hunt and pecked in a couple of spots, and he made money because he's a good he's not a good trader. He's a great trader
He's already out of it.
Because not only is he fundamentally one of the brightest guys on the planet, right?
Mm-hmm.
But he's a great technician. So he's just not going to do something in the middle of nowhere like all these Wall Street guys are.
Yeah.
It comes down to risk management. How much are you going to risk and how much can you make? If you don't know how much you're going to make or how much you're going to lose, you could lose to make what you think you're going to make, then you don't do the trade.
Do you make adjustments? Do you make adjustments in the middle of the trade, or do you just let it ride? So you do make adjustments. Okay.
You can you want to move your stop to break even.
At a certain point.
Well, yeah, once it starts going your way, you want to break even stop. But for instance, in the S&Ps, I'm looking for a minimum of 25 points. I'm not going back and forth, for anything less.
Can people use your system for less?
Sure. Look, I've got one of the great technicians on the planet. He doesn't use my stuff. He has his own math that he's developed. He uses it. But what happens is, if I say the market's going here and I've got a level there, then the guys in the room match up the work.
Even though they have their own
you have
math
a stronger level.
Okay. So even though they have their own math and system and all that, they still listen to your levels?
Yeah, because you can come about the same number a lot of different ways. And you'll wind up within, a couple of points of one another.
So on that USD Japan yen, how can you kind of walk us through some of the technicals?
I'll give it to you in the future so your guys can understand it.
What's that?
Here it is in the future so you can understand it.
Okay.
And again, you have to know what chart to look at. This is JY6. You don't want that.
Why?
Doesn't go back far enough.
Okay.
You got to go back to the pit. Electronic trading started in 78. Some charts got, extrapolated all the way back and some didn't. This goes back to 1976 when the yen opened up on the IMM.
Yeah. I mean, just to look at the lifetime of these things.
Yeah, and that was and the currency was trading before that, but it was trading on blackboards.
Okay, so the data's not on here.
Yeah. And here's 85. ORH move on the annual that year. And then it opened up and just kept on going.
So when you see that OHR, does that tell you there could be
a move? That's huge.
That's telling you there could be a big fucking run.
Yeah, well, you want to go once it went back above. Well, first of all, this is the Plaza Accord. The first week it moved. It moved 1,100,000 lot.
Okay.
It just kept on going.
So again, on that USD to yen, from a technical perspective, like what was the cloud telling you anything on that one?
Well, this was so far back, I wasn't even looking at the cloud. I didn't start looking at the cloud until about, 6,
No,
7
I'm
years
talking
ago.
about that trade you were talking about on 21, back in 2021. You had a chart up of it already. I don't know if you could go back. If this was it.
Yeah.
You still think it's going to go to this 50% level or something?
Well, because here, I'm doing the Plaza Accord swing.
Yep, there it is. There it is. Yep. So there was some
You have
fundamental.
to match. You have see currencies are tough from the standpoint that you just can't look at dollar yen.
What
You have
else
to
you
look
got?
at euro yen, euro Aussie, euro kiwi,
Oh, you gotta
euro
look at
pound.
all of it.
You have to look at every single one to know it's real. Because if you're just trying to do a straight dollar trade, like you're trying to do a straight gold trade, you want to bend over because you're going to get stuck.
And you're looking for matches.
The
Technical
more
matches.
things that line up, the better the trade.
So on this one trade you guys took in 21, you got fundamental news from IRA. Are you
No,
still?
I didn't take it.
Oh, you didn't take it.
Ira wanted this. Ira wanted to go the other way.
You want to short it?
He wanted to short the yen because he thought it was. He wanted to buy the. As the yen goes this way, it's going down.
Mm-hmm.
As the yen goes this way, it's going up.
Oh, there's an inverse. There's an inverse.
It's inverse dollar
Okay.
yen. Okay. So, we had this conversation. He made money in here.
Because you went short. He went short yen, and it went the other way.
He went short yen and long euro, or short yen, long Swiss. He made money on the trade. Okay. But it wouldn't sustain what he was looking for. He didn't really sink his teeth into the trade until it got to $160 yen. And then he caught it for 20 figures. And how did he catch that? Is because I did all the intervention work. I did all the currency intervention work.
Interesting.
I was at the World Bank conference and was a guest of AIG in 98. And every single hedge fund was long dollar yen or short yen, except for one guy who I found out the next morning was Rich Dennis out of Chicago, who came in long a few thousand yen futures that day. And I'm sitting next to one of the big, some of the biggest currency hedge fund guys on the planet.
Yeah.
At lunch, and I'm looking at my sheet, and I go, "So where are you wrong?" And yen was like at 138, okay. And I said, "Where are you wrong?" And he goes, "I'm not wrong." Okay, are you wrong at 125? Just kind of gave me a blank look. I said, "Are you wrong at 117? Are you wrong at 110? Where are you wrong?" They don't think like that.
Yeah.
Not their money. So the next morning, I'm on the phone with AIG out of London with my rep. And Goldman Sachs came in and bought 60,000 yen calls over the market. Probably because they knew the devaluation was going to. This was the day before Clinton was going to China with Milken and everybody else on the planet. Okay.
Yeah.
And the Chinese were pissed off about the value of the yen against the yuan. So it was 18 after 7 o'clock Chicago time. I'm on the phone with him in the office. And he goes, the Fed's in. And I go, can you get me $1 million? Which was 8 contracts. And he just stood there on the phone and goes, giving it the figure, giving it the figure, giving it the figure. It went 15 figures before you could even get anything off. All these guys at that conference got wiped out.
Wow.
Huge money. I mean, I think Rich made, somebody told me he made 14, 15 million in the morning.
Yeah, this shit, the amount of money you talk about that people are making is fucking absolutely ludicrous. Like, for me, it's like,
well, you can't do it the way you're doing it to make that kind of.
I agree. I will definitely agree to that.
It's a different skill set.
It is. It is. I can tell you're real passionate about this shit. Like, do you teach and share with people because it just like you have to? Is there something going on inside that?
Well, I've been doing it. All my clerks all became multimillionaires.
Like, why do you like sharing and teaching this shit to people?
Well, it's fun.
It fulfills you. Would you say?
Yeah. I mean, I did the same thing when I was sailing. We'd be at Lake Geneva in an event, and I sail the Melgus boys, and John Kostecki and a couple other guys came up. Vince Brun. Kostecki won 2 Whitbread races, multiple medals in the Olympics, multiple America's Cups. And they said, "Hey, Jud, show us your crew technique. What are you guys doing on the boat?" So I go up for a sail with them and show them. My attitude was, with sailing was, great. I'm going to show you what we're going to do, but we're still going to go out and kick your ass.
You think teaching people makes you a better trader?
For me, it's really hard for me to sit at the, I only have so much stamina.
Yeah.
Right now, because I had a lung transplant. I've slowed down a lot.
Yeah.
I miss stuff. The guys in the room helped me with that.
Nice. So you passed your knowledge down, and now they're helping you.
Yeah, I mean, and they help themselves because it's nice to see that they're paying attention.
You like watching your students or your clients crush it? Does it make you feel good?
Yeah, I always have. I mean, here's the S&P chart. Look what the high is here.
Yeah, let's go over this. I want to know what a Jud forecast is on this. Okay, so this is the high.
This was the election day high. Okay.
What time frame is this monthly?
This was November 5th range.
So this right here is okay. I see March.
Those red lines are election day.
Okay, so this is what time frame is your chart? Daily?
This is a daily.
Okay, gotcha. So show me the election again. The red lines.
Yeah, that's the red line. So if I squeeze this back, here's the November 5th, 6th. Okay. That's the election. Okay, and then the next day it took off. Now. I had a hard time with it because, I just don't think, I'm not a fan of our president. Okay.
Yeah.
Let's just say that.
Okay.
And I don't think he's good for, his economic plans are good for anything.
Okay.
And we don't have to get into that discussion. So I've got a bias.
So you have a bias on the market.
It's not helpful.
Is that bias starting to play out in the
now? It finally has, but it took into February. But here, you see that Wednesday high, stranded close in the S&Ps.
So those pink bars are Wednesdays.
Yeah.
Correct. Why are Can you explain to us why Wednesdays are so important? Because Fucking zero tells me how important. What is the hell's going on Wednesdays?
Well, on Wednesdays, one, I lost a fortune in the currencies in the 80s. If we close on our highs on a Wednesday and I take a bunch home, I'd always lose money.
Yeah.
Then it's take me 2 days to get the money back.
So you would be losing money on Wednesdays.
Anytime a market goes directionally on a Wednesday and you think it's going to follow through, it sometimes it does, sometimes it doesn't, but you generally don't get penalized for waiting for the next day.
Okay.
You're not missing much.
Is there something?
There was one Wednesday. I'm going to show you where it goes back to.
Is there something going on the Wednesday fundamentally, technically?
No, it's just how money moves.
Oh, so money moves different on Wednesdays?
No, it's just, it's the midweek shuffle, baby.
That's what it's called? Midweek shuffle.
That's what I call it. It's when they try to jerk everybody out of their directional positions.
So everybody's trying to fuck everybody.
Yeah, so here, what is this? Yeah, November 1st. This is when in 23.
Yeah.
Yellen went to short-term funding, okay? And you had a big upward bar on a Wednesday right into the 200-day. Now, I don't like chasing that. It's just me. I won't do it.
Yeah.
But if you waited till 5 o'clock at night into the next time frame and you bought it, you made nothing but money. It went straight up. That was a low. But that was an event day. And why was that event day? Because that was the day that Yellen started funding the debt with T-bills.
So this is kind of like that Concord or Lake Concord or whatever the fuck you said. This is the type of event you're tracking.
Yeah.
Okay. So Yellen did some shit that changed stuff. Right. Okay.
Here in 22, I'll show you another one. Back here at 42.64 in the summer, in August, right here at that high.
Yeah.
That's when Powell, that was the Powell pivot to higher interest rates.
Oh, okay.
Okay, so we went down below the 200 week. We had a big level down in here on some other work. And I had a macro number down there. One of the guys in the room said it tried it like 6 times during the day. And he just said, well, I guess we're supposed to buy it. And it went straight up.
Wait, so what was down there specifically?
I had one of my magic numbers.
Okay. Your proprietary numbers.
Yeah. So you see how this is the big event. It came down. Once it went closed above that event high in May of 23, it took off.
Can you break down can you go back to the election of this, the Trump election of 24, not 16? Sure. So you were showing us a Wednesday bar and you were going to explain something. And it was at the high and then the market went down. If you don't mind zooming back in.
Right here.
Yeah, right here. So what, if you don't mind continuing.
So this is what, I showed you the one Wednesday, and you get them once in a while where they follow through and it's really big, but it's not a high probability thing.
So it's not high probability. So Wednesday.
But it was high probability because of the event. And one of the guys in the room said, Jud, the fundamentals have just changed. I'm long.
Where?
When I showed you that.
Oh, yeah, way back. Okay, yeah.
Yeah, because the fundamentals had changed.
Yeah. Okay. So what happened up here in February?
I just ran out of steam.
Just ran out of steam.
Trump is Trump.
Mm-hmm.
With the theater and all the other nonsense that he's on TV every second saying he wants to beat up this guy or that guy.
Yeah.
Everybody got tired of it. So you know, everybody started pairing their risk because they didn't like the noise.
I see.
But some point in time, we're going to come back and take that out.
Yeah.
The question is from where and when.
So where ES is currently, what do you think
See,
is going?
it trapped everybody up here long.
Oh,
It
yeah.
hasn't let them out.
I know that area too. Like I watched that area from my own perspective, which is interesting to see how you're looking at it. It's interesting to look at what you look at and comparing notes. You know what I'm saying?
Yeah.
So what do you think's going on with ES now? What do you have any bias or anything?
Well, you have year end in Japan
What does that
over the
mean?
weekend. That's going to affect the yen flows.
Okay.
You
What is
got
inflows?
what?
What does inflows mean?
And, well, capital flows. I mean, guys are going to square their books up.
What does squaring up mean?
Well, if they're long, they might get out, or if they're short, they might get out
Okay.
because that's their fiscal year end.
Oh shit. Okay, I got you.
Okay, so there's things going on there. It's
In
their
Japan.
fiscal year end.
When is it specifically? What date is the fiscal end?
Monday,
This coming
Sunday,
Monday.
Monday.
So something's gonna happen where we're gonna have a pivot off of that.
Yeah, and our quarterly close is Monday.
Okay. Now looking at your technicals right now, do you have any idea of where it may go?
Well, yeah, I have an idea where I think it should go before I can get long stocks for a much longer time frame.
Could you share that by any chance?
Sure. Right down here,
What is that? That's the E-mini.
around 5,000.
That's where you think it's gonna go.
Well, I don't know if it's going to go there. This is the 22 high we broke from off that Powell pivot. Okay.
Oh, that's the Powell pivot. Okay.
Yeah. And then once we went above it, whatever it did, it took off, right?
Mm-hmm.
And then expanded. So, I'm waiting to see how this thing trades. It looks one way in the monthly. Look at it at a quarterly. I mean, momentum is at 5,000.
Okay.
And every time we get to these momentum lines, you start looking around to see how the market's acting.
What's the momentum line? Which one is that?
This purple line.
Okay.
I call it. It's not what the name of it is. It's just what I call it. It's a cloud study.
Okay. And when something hits that, it gets momentum off of it?
Well, one, it's an exit. It's a buy before you sell.
Okay.
So if we got somewhere down in here, you're in the area code of buying them for a longer term trade back up again.
Oh. Okay.
But if you don't have a quarterly chart or a semi-annual or an annual, you can't see it.
So you're waiting for more matching before.
Well, you can look. You have to break out what you're doing, Kat.
Yeah.
Are you trading to make money on a day? And if you make 40 handles or 25 handles on whatever your number is, call it a day. Go do something else. Don't sit in front of the screen. The screen's your enemy.
Yeah.
I mean, I walk away for hours every day.
Yeah, I try not to trade for more than 2 hours. But it's different. I'm not making nearly as much as you on points,
Yeah, so this is just things I've learned over the years, and a lot of them were hard knocks. So if people come and they want to learn from me, well, basically, I'll keep them from blowing up their accounts, and at a minimum, And two, I'll give them a skill set that they could use, over their lifetime of investing, whether they're however they want to trade.
Yeah. How do people find you?
Yeah, I'm a terrible marketer. Most of it's word of mouth.
Yeah. How can people find you? Because I'm sure people listening to this are interested. Because there's people who listen to me that my style's too intense. So there are people who are more into this technical stuff. How can we find you? Right here?
Right here. All they have to do is go to whitewavetradingstrategies.com, put in their name and their email address. That's it. They'll get a 30-day trial. You can come in and listen. But they won't understand. They have to give themselves some time to listen a little bit, and they won't understand until they become a subscriber and get my proprietary numbers.
Yeah.
And they're not close together.
What do you mean?
Well, they could be 150 points, 200 points apart in the S&Ps.
Okay.
They're not close together. Sometimes they are, but most of the time they're not.
You're talking about that from level to level because you say it moves from one level to another.
It's going to move from one of these big macro levels to the next level.
I got you.
Your job as a trader is to figure out how it's moving from A to B and capitalize on that. That's the whole game. And I use a multitude of indicators. I mean, here, let's just go back. Look what's happened to cattle since we talked.
Did it go up?
Straight up.
I see that.
Okay. Now, I can take, you were asking me about, the equity bond spreads, right, the other day, and it's just capital flow. Is money going in or is money going out? That's all you're looking for.
And
now,
you can see that based off your technicals.
Yeah. Now let me take a look at here. Let me just show you the difference here.
Yeah,
and why everybody looks at the wrong chart.
Okay.
Okay, you see this chart? This is a mini chart.
Yeah.
Goes back to 96. You don't want to look at that chart.
You want to look at what?
You want to look at the pit. So CQG, for me and two other guys, got permission from the exchange. They synthetically put these prices in for me. So
Really?
I can go back for Life of Futures and see the swings.
Can your students get access to that kind of history?
Yeah, you get CQG. You can put it up.
Okay.
Here, I'm going to show you.
Yeah, let's see this S&P or
right.
whatever you want to
so
show.
Here's one of my main quote boards. Okay.
Yeah, this shit hurts my eyes.
It hurts mine. All right. So right here is SPM. Okay, that's day session. This is only U.S. session. DFM U.S. session Dow.
Yeah.
Then I have the minis up here. So I can see what's going on.
This is how you're keeping the pulse on every market moving.
Well, I have all the currencies down here.
This is like watching multiple charts, but without watching multiple charts, correct?
Well, it's how my eyes were trained. When you came down to the floor,
this is
when
what
the
it
IMM
was.
started, there was nothing going on. Okay, it was pretty quiet most of the day.
Yeah, you told me that the quote board is how you guys used to look at shit in the pits, and that's what this is, right?
Right. This is basically a mirror of what was up on the quote boards around, the Board of Trade and the CME. So if you were standing in the pit, you wanted to trade oil or, grains or whatever, you'd look at those prices and then you could call in an order to the other side of the floor or to a different exchange and buy or sell something. And then the machines went to Quotron machines. That was terrible.
Yeah.
One of my partners used to take a 7-iron and beat his to death.
So you're going to show me something. You're saying that I got to look at the right charts.
All right. So down here, this is S&P pit. It filled that gap. That's the low, and that was the low of the day and rallied 50 handles.
Where's your mouse cursor at?
Right here. Can you see it?
No, it's not showing.
Down lower left, I got a purple bubble on it.
Oh, it went away.
Oh, hold on. No. I'm sorry. That's because I don't know what screen I'm on. Here.
Okay.
Right down here. That's the SPM.
Okay.
That is
this is the pit chart.
This one right here, that's U.S. session only.
Mm-hmm.
So before I close out the room, we went down to 20. I said, I don't think, you're looking at 78. And that was it. Here, I was looking at 78 up here on the 90-minute, and on the 240, I was looking at 78. Now it's 12:30, right?
Yeah.
And now the capital flow off this 240-minute chart is trying to go up again, and you got to see if you can get anywhere, because the 50-period average on that is 50.5. So if it gets above 51, maybe it rallies a little bit. I'm not going to get too excited about it.
So there's nothing going on in ES.
There's nothing for me to do. You're at resistance, you're at momentum support on the hourlies, whichever way it comes out of here.
What's EPA A60C?
That's the minis on an active daily 60-minute chart.
Okay. You're looking at a lot of fucking S&P charts.
Well, the more stuff you look at and you learn it's all about confirming your work, not seeing some mystery price on a dome trader.
Yeah.
You're trying to use the algos to get you in and out at extremes, because they'll always overrun by a couple of ticks. And if you put your orders in the right spot, you'll get filled.
Yeah. Well, I appreciate it, Jud.
Anytime, Kent.
Yeah, for
and
sure.
People are welcome to sign up versus trying to get a hold of me any other way, because then, it automatically goes into my system. And if I write something, you get it.
They can talk to you when they sign up?
Yeah, every day.
Well, there you go.
They get a room invitation. They get an invitation to my room I usually give it for a month, because I'm not easy to understand.
And do you have like written material or videos and stuff they can look at?
There's tons of videos, hours.
On your YouTube?
YouTube, yeah. White Wave Trading Strategies. It's just, Ira and I, some of the better global macro minds you'll ever listen to. And they'll come up with a thesis on what they think is going to happen fundamentally. And then I will match up that with a technical level. Yeah. So sometimes it might take 6-7 months to play out, but we already know 6 months earlier what that level is and what we're looking for.
God damn. That's like some straight up, some insane forecasting skills. And you listen to some of these guys and they really have an incredible vision. I don't have that vision, but I can take that vision that they have and translate it into an actionable area with minimal risk management. That's when you can, learn to, because you want to be able to get away from the screen. You want to be able to, get your trade on at an area with an idea
put in a stop and not stare at it and drive yourself crazy.
Yeah.
Because markets take time to turn, okay? They just don't turn on an instant. You know, sometimes it can take 2 to 3 days for a turn to occur. You know, you get the wiggles during the day. That's one thing. But for a market to really turn direction, you know, it's a 2 to 3 week process sometimes, and you don't know that process is underway, you know, until it gets going for 2 or 3 days.
Yeah, that's actually kind of how I, because I do look at higher time frames on ES, and I notice that when there's these major turns, it does take a few weeks, and then you realize it after the fact.
Yeah, but I always know when it's happening.
Shit.
Because the way I line up all the work, I know. That's, you know, people, you know, it's a body of work that very few people in the world know, can see, or bother to keep up. Because it, you know, Zero will tell you, it takes some work to keep it up.
Yeah. Well, shit, Judd. We'll end it on that
Thanks
note.
for the conversation. It's been terrific.
I appreciate it. And I'll talk to you later.
Okay.
All right. See you later.
Take care.
Well, guys, that was a lot of information. It's always interesting to hear perspectives from other traders, people who look at things you don't look at. Obviously, I have my opinions and biases on markets, but the thing is, do I truly know everything? No, I don't. For me, technicals was something that I just never thought really worked that well. And seeing it and hearing it from this perspective and looking at it from such a long-term view and looking at a long-term trader is interesting. I hope you guys enjoy that, and I will see you in the next one.